Hello everyone. Good morning and I believe you're all good. So, getting introduced to the chart, to what the market looks like. This is the chart. This is the market chart. This is synthetic indices right now. We're the market space. We talked about MT5 and we talked about broker. So I said an MT5 is like an application you use in operating the broker. So this is just what I mean. From here, you'll be able to press your buy, you press your sell, you do a lot of things you want to do. Anything you want to do, you do it from here. So moving on to the foundational terminologies. And we said the foundational terminologies are the terms used in this industry. Just like you have every other industry, you have in the medical line, you have syringe, you have patients, you have sickness, you have health, you have operation, you have surgery, you have doctors, you have nurses. So in trading, there are terms we make use of as well. You understand, being a professional field. So terms like we have the pips, we have the lot size, we have the spread, we have margin, we have leverage, we have equity, we have balance, we have free margin, we have margin level. Are we together? We have the stop loss, we have the take profit, we have the entry point, we have the volatility, we have the drawdown, we have the break even, we have the ask price, we have the bid price. Are we together here? So now I'm going to be explaining each of these mentioned stuff to us. So now coming to the pips. Now, as you can see on my screen, you can see there is a sell and there is a buy at the right side. You can see a sell at the left side. So what is happening here is, you see the figures are moving, the decimal. You can see 0.62, 0.34, 0.30, 0.98, 0.47, 0.51, so on and so forth. It's just coming in and coming out. What these people are doing is, it is the smallest measurable price movement. It's calculating the movement of this market. I'm coming. Let me move to a lower place from it there so that we can see something. I want us to see how the market is just moving up and down, you know. So I don't know if you understand this. You see, as this market is going up, it's calculating, it's changing its figures. So this pips is using calculating. You understand? It's the smallest measurable price movement. Are we together? And now talking about lot size. Lot size is just simply this figure in the middle. Okay, let's say I have 0.5. We have 0.5 here. Okay, let me say I press a buy. Let's say I press a buy. Okay, so let's do it this way. Let's do it this way. Now I'm on a buy. Then see my SL. I have $83 as my SL at this point. I need to mark it out so that we can understand. Okay, let's say this is my stop loss level, this green line. Then okay, just make sure you're following. I have 106 US dollar here as my stop loss. So now when I change this lot, when I change this figure to another one, then I press the same buy, then you see how much is going to be charging me. I'm coming. Sorry. Okay, perfect. I'm charged 197 US dollar here. I'm charged 197 here. But the other time I'm charged 197 there. But you see this other one charging me just 110. So now the lot size is the volume or size of the position you are trading. It is the amount of risk you want to take. Okay, I have $80. You understand? I have this, I have that. It is the volume or size of position you are trading. So sorry, let me just close the trade. So that's like 19 US dollar profit already. But that's not why we are here. We are here for a different cause. This one is 73. Okay, so now coming into spread. All of us will have heard what spread. Spread is the difference between the bid and the ask price. The difference between the bid and the ask price. Okay, so this is what they mean by spread. You know, the line in between this green and this red line that is moving up and down, that is moving on this chart, this particular chart, this green and red that is moving, the space in between is what they call spread. It's what is called spread. Then we have the margin. The margin is the amount of capital required to open a position. That is, there's an amount of money I need to have now before I can trade. You understand? No, we said the lot size is the volume or size of the position. So now, to make use of that lot size, it is my margin that will determine. Are we together? So talking about leverage, the leverage is a financial tool that allows traders to control a larger portion or a larger position with less capital. So what this means is that before the rise of brokers, the people that were liable, like people that were licensed to trade, were only the rich people. You understand? It's not people that owns like $1,000, 3,000, 50,000. No, these were banks, companies, big institutions. But it was the arrival of brokers that made possible for people like us to be able to trade. Now you can risk $10, you can risk five, you can risk three, you can risk 10. You understand what I'm saying? So now it is now this leverage that gives you the opportunity to control this market with your little money, with your little capital. And what they're saying is that each time you put in money, let's say you put in $10 as your SL, just like the way I did the $10 SL the other time here. The broker has added um what's it called? They've added about 99%. Are we together? They added 99% of their money just to make sure I'm able to take that trade. So now if you are risking $1, then the broker has it has already given 99 USD. Are we here together? I hope you understand what this means. So the leverage is just like a price paid ahead just for you to do one or two things. That is just how easy it is. Then coming to equity, this is simply the account size, the everything in your account, everything. That is your equity. Equity is just like your money, your capital. So the balance, we know account balance. The balance is the account value excluding open trade. Only update after the trade is closed. So let me see if I have something on this. Sorry. Okay. You can still move on. We can still move on. Sorry. So the free margin, this is the amount available to open new trade. The amount available. That is, maybe you are still on a trade and you want to open another trade. So the amount available, the amount left, is what your free margin is. Then your margin level, a critical safety metric. If it drops below a certain level, the broker may limitate a margin or may initiate a margin call or close. So the margin level is like your boundary. It gets to a place where you have loss, and the broker itself will have to close a trade for you and say no, that is okay, that is okay for the day, you can't lose more than this. So for the stop loss, okay, I explained a little about the stop loss the other time, so let me move again. So let me say I'm getting a sell here. So now the stop loss is just like the amount I'm willing to risk, the amount I'm willing to lose. Here I'm willing to lose 291 USD. So that is an automation. The stop loss is an automation order that closes your trade at a specific loss level. So now if I'm willing to lose 291, whenever this market that is moving now, whenever it gets to this point where my SL is, whenever it gets to 252 loss, is going to close the trade for me automatically. So even if I'm not there, once I set it, it's just going to close for me. Then coming to the TP is just the opposite. Whenever this market gets to whenever this market gets to um 208 US dollar, even if I'm not there, it's going to automatically close the trade for me in profit. So that is just how easy it is. It's just a means of disciplinary kind of trading. You understand? You discipline yourself with SL. You must have an SL. You must have a take profit. So now, talking about an entry point is where you enter the market. It's where the market is executed from. Just like this one. This is my entry point. This place you see sell one. This is my entry point. So this thing is as easy as this. It's as easy as this. Um, Moving on again, we have the volatility. That is, it refers to how fast or slow the price moves. You can see this line moving 1 2 3 6 3 3.70, 0.65, 0.73, 0.47, 0.90. So that is the volatility. Like, okay, this market is moving slow, it's not moving fast. So the volatility refers to how fast or slow the price moves. Are we together? Then coming to drawdown. Drawdown is, maybe you have 50 USD in your account and you've lost trade. Maybe you lose $10 trade already. So you are left with 40. So now you are in a drawdown of $10. That is just like a minus of your equity, a minus of your capital. That is what a drawdown a drop down is. Then now talking about break even. Break even is the point where your revenue equal cost and profit or loss equals zero. That is, if you enter this trade as a buy, so now if you break even on this trade, that is, let's say this trade has moved a little now, then you break even on this trade like this. Like my break even is on my entry, is on that buy. So now comes back to anytime this market comes back to um come back to my entry, is going to take me out. That is, I'm not going to be gaining and I'm not going to be losing anything. That is what break even means. Are we together? So let me just close it. This one is even in profit already. So sorry guys. Okay, so coming to the ask price and the bid price, let me use the word scenario, the real life scenario here. Let's say there is Real Madrid, a football club, and there is Barcelona. Are we together? So now, there is this player called Cristiano. Then Barcelona wants to buy the player. So Barcelona is going to bid for Cristiano. You understand? Like, okay, this is how much I'm willing to pay. But now Real Madrid being the one who owns Cristiano, we now ask Barcelona to bring so amount. So the ask price is the price where you'll be quoted at when you want to buy an asset, like you want to buy Cristiano Ronaldo. That is the amount the owner will tell you, like, okay, I'm willing to sell him for you at so rate. So now you being a bidder, you now say, okay, I don't have more than this amount. Let's say the ask price of Cristiano is 200 million and you have 150 million. Then you'll be like, okay, you were asked to bring 200, but now you are telling them that you have 150. So that is your own bid price. You are bidding for it at 150 million, but the owner is asking you to bring 200. So that is just what the ask price and the bid price is in the industry. So the ask price is the price where you'll be quoted at when buy an asset, while the bid price is the price where you'll be quoted at while selling an asset. Are we together? So now we'll be moving on to types of orders. So moving on to types of orders. Um, so for the type of orders, we said we have the instant execution, that is immediately, something like this. Sell, buy rather. You see, instantly. I want to buy instant. I'm not waiting. That is an instant order. Are we together here? So an instant execution, this simply means joining the market at the current price. Now this particular place the market is at, I'm joining it immediately. Are we together? So now the second one is the pending order. And for the pending order, that is where we have the pending order is of two types, and that is where we have the stop order and we have the limit order. But most of the time people make use of the limit more than the stop order. Most of the traders, like let me say 90% of traders, make use of limit order. Is a pending order, that is an order that is later, not right now. You are not joining the market now, but later. But you set it already that okay, when the market gets to this place, you it should trigger. So something like this. Okay, I'm going to be doing something. So this is my limit order. You can see buy stop. I said we have stop order and we have limit order. So now you see buy stop, you see this one. So let me just explain what this means. This means, so for the stop order, we have the buying stop and we have the stop, and we have the self stop order. That is for the stop order. I said in pending order we have two types of order. Generally we have the instant and we have the pending, but now under the pending we have the stop order and we have the limit order. So now for the stop order we have the buying stop and we have the sell stop. So for the buy stop, let me do this. Now this market is coming up. I want to explain what the buy stop means. This market is coming up. So now I'm going to place my trade here that okay, whenever the market gets to this particular point here that this buy stop is, it should include me in this market. Like I want to join the market at this place. Now I don't want to join the market and maybe my confirmation is not here yet to trade. Maybe it is here. So now this buy stop, whenever the market buys to that point, it's going to let me join in. You understand? Then I cannot join the market for more buys. So the buy stop is the order placed above current price and price keep going up. The order placed above, now this is the current price of the market. The market is here now. So now it is the order placed above current price and the price keep going up. So something like this. And for the sell, um for the sell for the sell stop, it is the order placed below the current price and price keep going down. So now if I'm waiting for this trade, maybe due to my confirmation, I'm seeing that this market is going to sell later and I'm not there, I can just set my sell stop down here, that anytime this market here gets here, then it should let me in into the market. So that is just what the sell stop is. So for the limit order, now we have the buy limit and we have the sell limit. So let's do this. So now we have the sell limit. The sell limit is okay, let me explain the buy limit first. So the buy limit, it is the order placed below. Remember the buy stop is the order placed above current market, but now the buy limit is the order placed below price, below price, and price keep going up. So now I know that this market will keep buying, but now the market is too expensive. I can't join this market here. Imagine if I join this market now and let's say my SL is around this side, I'll be risking 461 USD. That is too much. But now I know that maybe this market will retrace, because normally market always retrace, go up, retrace. So now instead of joining this market here at 447 USD, I can say, okay, whenever the market comes back to this place, I'm willing to risk 182 USD. So it's not like I'm preserving my capital. I don't want to lose too much. I don't want to risk too much. So now the buy limit is the other place below the price, and the price keep going up. So whenever the market comes back here, this market, whenever it traces to this place, due to my own confirmation, when it touches this line, it's going to reverse up. That is, it's going to go back up. And for the sell limit, coming for the sell limit here, so this is what we do. Sorry. Okay, this is for the sell limit. So the sell limit is the order placed above price and price keep going down. The order placed above price and the price keep going down. So this is what it is the price placed above price. So here, so I'm waiting for this market to touch this my line here. Whenever it touches the line, then it should reverse and start going down. That is what a sell limit is. And as time goes on, we'll be familiar with all these things. So moving on to the analysis methodologies. There are two types of analysis methodologies. We have the technical analysis and we have the fundamental. I think this is not actually our field for now. The technical and the fundamental, because we are still in the introductory aspect. And I said maybe the next video that will be shared will be on time frame, and by then we are going to be making use of this same chart. But for today, I hope we learn a little. We've done the foundational terminologies, we've done the types of orders, then the introduction to this particular industry is just the introduction to the synthetic indices. You can click the link on bio, or in the link you can check our link, join us on WhatsApp, join us on Twitter, join us on TikTok. Test the admin if you need a private mentorship or whatever. We're available for anything. So guys, that will be all for today. So the next video that I'll be dropping will be on time frame. Thank you so much.